Hello everyone, good morning. So let's review yesterday's price action. So this is a video for mostly who are still struggling. So you need some kind of a model where you stick to it. Okay, you don't try to copy what others are doing in trade room. Okay. See, the whole objective of finding the algorithms or algo path is to know every move of the market. And for some of us, that is how we like to trade. But money can be made by doing uh, not that also, right? You don't have to trade every swing. Now, people who are trying to, I don't know, like most people who DM me saying it is tough, it is done that, this and all, which I understand because even I felt it tough. I'm sure everybody feels this trading is the most toughest job where you make easy money, right? So what is the step? So you don't look at everything. You don't look at every trade. You don't look at every algo path. Nothing. Okay. So open any higher time frame. I'm using 15 minutes. You can use 27, whatever. And know only this that price moves to take liquidity or to fill the gaps. Okay. So you know in your direction if there are gaps. That's where you need to take a trade. Okay. And I would always recommend using the first presented gaps or wherever an order block is placed or wherever a high is placed, immediately if there is a gap, I would look at that. Okay. So for example, if there is a low here and then there is a gap, so I will not trade this. If I want to win, I will only trade here. Okay, it's pretty simple. Similarly here also, if the market stopped here and then displaced, I will try to sell buy here. Okay. If I want to sell, I will look at this sell side of the curve and I will mark this FVG and I will try to sell here. Sounds simple enough. So any higher time frame, I would say minimum 15 minutes and then you can go higher. Mark these fair value gaps. If you don't like fair value gaps, it's fine. Wait for liquidity sweeps. So mark liquidity sweeps. So say here, once we run above this high, then only you will take a trade. So anytime high is taken, the market is going to reverse, right? That's the smart money concepts. So again, high is taken. So keep doing this. You take some trade. You have this, and you could have bought it. Okay. So this is pure ICT strategy. It has nothing to do with gold back time. It has nothing to do with PO3 ranges. Nothing. Okay. It's so simple for anyone to understand. You all have come from ICT background itself, right? So this becomes much easier. The only advantage gold back time gives you while trading this is at what time to enter. That's all. Okay, that will minimize your drawdown. Say for example, now obviously I'm looking at this in hindsight, so I'm going to pick trades that we won. I'll show you some which didn't work out as well. So say we wanted to trade here. Now how do I know this FEG will work? Okay. So when we go into 1 minute, if this FEG is likely to work, it will either create a low at 00, 0307, 2935, or 7177. Now why is this? Because you already know algo paths. Okay. So so now everything is sorted for you. So you have a fair value gap, like a point of interest. You have a time that you need to focus on, and you need to click the button. Okay. What is your target? Now, when you look at here, are there any fair value gaps in this from this range, this high to this low? No. So if I'm buying here, I will at least target this high. Okay. If there was a gap here, I would target the gap because my idea is to make money. That's it. Nothing else. Not to prove to anyone that I bought here, I sold here. No, that is not the objective. Okay. So let's figure it out. If there is no time that comes like this, you don't take a trade. So you don't lose anything. So your point of interest is this gap. So there are like 1, 2, 3, 4 candles came into this gap. Okay. And all you have to find is these lows that will tell you an algo has started or an algo has ended and you can buy. So this does not have like 100% win rate or anything, but this is the most easiest way to trade. Now I don't care what is happening here. Is there an algo path, CE time? I don't care, right? My point of interest is only this. Let me put this in a bit brighter color so you guys can see. So I have 35 here, so I can buy and target. I don't care what is the algo path, nothing I'm caring. All I'm thinking is the market stopped here at 35. I will buy. Okay. Market comes back again. So this time it does an algo 1 start here, which is 00 to 14. So which is the beginning of algo 1. So you could have either bought in here, you could have either bought in here, and you would make 86 handles. You can always take some partials above this highs, equal highs. Okay, so thereby, if the market is not in a mood to be bullish, you can at least make some money out of it. This is pretty the most easiest way to trade. Okay, where I am not breaking my head about CE times, GB algo paths, or anything. Okay, those who are struggling, you have to stick to this. If you try to be adventurous and want to trade every swing, then that's not on me, right? It's on you. So we looked at one FEG example. We'll look at one swing liquidity sweep example, and then we'll look at one failed example. Okay. So say here liquidity was swept and price went higher. Okay, this was during New York Open, so let me not take it because the volatility will be so high. You don't want to engage right there, especially if you are a beginner. Let's take it here. So this was the high, and then market ran above it. Then so we had 1, 2, 3, 4 stabs above this, and we want to find these numbers or times. Okay, so here you have 1730 and you short. But CE time shows the direction, so 35 is in support. So you lose this trade or you kind of cut at break even. But I'm not trying to long here because that is not my setup. So then I will look for 1750, okay, not useful for me. 1757, not useful for me. 1810, not useful for me. But all I have to look for is whether there is an algo 1 that is being started. Okay, I don't see it, right? It's 1754 to 11. So you don't take this trade. Now, am I upset that I was not able to capture the highest high? No, I'm not. Okay. So here my setup didn't show up. So all I have to do is find the next. So here, this FEG. Right? So as I told you here, the first presented gap. Here also you look for the first presented gap. So your area to focus is only here. So we get a few stabs here. So 25, 26, 27. Again, nothing. Okay. Ignore. No worries. Now we come into the new day here. But say you're not able to capture any shot based on this, which is totally fine. Now we'll look at one failed trade. So there was this FH. This is also first presented gap, right? And there was this order block. After that, there was a gap. So I would want to short here. So if I go here, so here I see 1626 making a high. So if I'm shorting, I don't want those numbers, right? But how do you know this gap is going to get broken? Because once we mitigate this gap, now look at the low that is being made, which is 35. So this tells you that this bearish gap is not going to work out and we are going to break out. So even this is why time is very important. Just because you're not randomly selling and buying at FEGs, you're buying and selling at the right times. Okay? And this time will tell you the signals. Like, okay, so we were in the 15-minute gap, but 35 is being made at low. So there is a likely chance of this gap being broken. So I should buy and hold till the other first presented fair value gap that I showed you, where we failed. Actually, we didn't fail here. If you want to take this number 2121, which is 00, when you subtract, and this is where algo 1 begins. So you could have sold here. Okay, sounds so simple when we do like this. So even today, forget about all these. So even today, now what should be your focus? So we began from here, right? So right now, my first presented gap is here. So if market comes here, then only I will trade at those algo start and end times. Okay. We hit this first presented fair value gap at the open. Right? The market just stabbed into it. All you have to look for is this time. What is the time? So this is 21. So I'm not interested in it. Okay, just leave it. Now you think you might miss out. Oh, you missed out on this entire move. Yeah, you did. But that's how it is. You're not going to capture anything, right? If you don't want to get frustrated, if you don't want to uh, figure out every move, you don't want to apply logic of the algo path because it's too hard for you. So then you have to adjust to trade only the fair value gaps or the liquidity sweeps. Okay. So now we have a liquidity swept here. All you have to look for is where the market is stopping. So it's stopping at 45, 55. I'm no, I have no interest. Okay. If we play an algo path, this could be a reversal, but again, I don't want to complicate. So I will trade only if the price retraces here, or I will look for first presented fair value gap here. So if price stops here at 0.0, right now we are very close to that number, like 0.3, 0.7, or 29.35, whatever, then I will long. Hold it till this FEG. This FEG gives me a short, sell, hold it till this FEG, or this liquidity. So just doing this will give you definitely one or two trades that you're satisfied with. And then you're not thinking that, okay, you have to learn a whole new concept, you have to constantly keep doing algo paths. Nothing. This is pure ICT teachings where the time is going to tell you whether to click the button or not. Not every FEG is going to react, but every time that is at 35 or 00, that is going to react. Okay, so I want those who are struggling to practice this. Okay, if you come today again with trying to map the entire algo path, okay, I'm not going to help because I want you guys to achieve this first. And while doing this, you will achieve playing two paths and everything else. Okay. All right. Good luck. I'll see you during the New York Open and see how you guys are performing. Take care. Bye bye. Hello everyone. Good morning. So I'm following up on yesterday's video where we talked about 15-minute fair value gaps, the first presented gaps, and how they give you opportunities that you can hold the trade for a long time, right? So let's look at some. So we had this first presented gap after this order block and this high. So it's natural that the price would react here. Okay. Then we had this where the price reacted not only once but twice. Then on the buy side we had uh, like a BC, we had this one where also price reacted. So you could have shorted, you could have bought in, you could have sold again, right? Could have done so many things, but at the right time. Today we are trying to add one more thing to our model. So we will find out whether in this FEG there is a CE timed gap. Okay? That will increase our accuracy, correct? So now two things to check. So if there is an FEG here, a higher time frame FEG, there should be a 1 minute FEG here as well, where the price will react. Is that a CE time? If S, then your accuracy becomes higher. Second thing is waiting for the price to form a high or a low at these times. Okay, they look like a lot of numbers, but at the end of the day, only one out of it will react. Okay, so here in this area, we had this one. So we had this 523 FEG here. So you can see CE timed FEGs are what price is attracted to, right? So this entire down move candles, there are some volume imbalances gaps, but we have a CE timed gap as well. Okay. Now we want to look for whether the market would stop there. Okay. So here at 6 it stopped. So you could have shorted this, and because it is 7 and you lose this trade. Okay. So again, as I said yesterday, it's not a 100% win rate. So you take a trade here and you immediately lose it. And later we have 922, 921 making the high here. So here addition can be used. I don't know like if the market uses addition, but if it does, then we can say 9 plus 21 is 30 or 29. Okay. Now if you don't want to consider addition, so then we would not take this trade. Then we come into this FEG. So again, we can see there is a volume imbalance at 34, which is a CE timed gap, right? And that's where price reacts. So we have 1024, we have 1041. Okay. Again, addition can be used. 1024 is 35, right? Or 34. Again, you might have missed out, so leave it. So now again, we come into this bullish fair value gap. And we can see here 735, again a CE timed gap is present. Okay. So then it is most likely to work. That's what I wanted to highlight. So here 813, I'm not interested. This is where I'm interested because this is 1002, 1003. So you buy here, hold it till this FEG. We come back again at 11 o'clock. Here we don't push to this FEG, but you could make some money. You have 1135 here, 1147 here, which is 36. We have a 35 gap here as well. So you could again buy. Okay. So you'll make some money for sure. So this is where AlgoPath can really help for you to exit at right times. Again 1304 and finally 1335. Okay. So all of this, like you could have had 1, 2, 3, 4, 5. all these 5 trades we could have had in this FEG. Next, this FEG. So there was this 1448 gap, which I considered as 34 after subtraction. And this is where I went short at the open. And what was the time? 15:30. Okay, and gave you the big move. Now, how long you could have held based on where is your next first presented gap, right? So this one we mitigated, so it would at least come here. So you could have taken some partial here or aimed for this lows. Okay, so you see how many opportunities. Nowhere I used algo path or anything. Now there was this first presented gap here where the price took support now once and twice. So you could have seen the same thing. So this is the last gap you have. All you have to look for is support. So it was at 0, 0. So algo 1 started. Prior to that, clear. You could have subtracted and made 3. This 121 minus 18 is 3. Or you can have 2139 as 60 or 0, 0. But purely based on minutes, you didn't get an opportunity here. But you would have got here. Okay. Once we went above this high at 0, 0, you know it's a bullish algo 1 to go higher. So what are the plans for today? So right now we came here into this gap, the first presented gap. I don't know whether there is a gap here. I don't think so. So we have here 409, 408, which is part of 7, dipping into this gap, which you could have traded as a beginning of the algo. Okay. There's actually no FEG here, although on the higher time frame we can see the gap. So there's no CE timed gap here. Okay. So the one addition that we want to make is mark the 15-minute gap. Check within this higher time frame gap, come to the lower time frame and see if there is a CE timed gap. Okay. In this CE timed gap, the 50% of the gap is sensitive, like how it happened during New York Open. Right? So the 50% is the bodies never came above it. This is the kind of reaction we want to see. And then aim for the opposite PDRs. Okay. Now slowly incorporate algo paths and see, okay, price is coming here. Does it make sense for me to trade an end path or a start path? So this is the next step, which we will evolve into. But right now, just focus on a 15-minute gap, find the CE timed gap inside it. If it is there, then it has a high accuracy. Then you try to look for these times that I gave you within that gap, and you would get plenty of trades. Okay. All right. I saw some good trades yesterday. I hope it's not going to be like, okay, just because you watched a video, you'll be profitable the next day, right? You have to execute. You have to work with your psychology to hold the trade. So it's not an overnight job. Okay. But this is a very simple model that you can do. You can play around with and slowly add new things to it rather than trying to do everything all at once. Okay. So let's continue to focus on this today as well and see how far we go. Thank you for all the support. Take care. Bye bye. Hello everyone, good morning. So in today's video, again, we will revisit the 15-minute fair value gaps and one of the start or end paths. So both these big moves and the entire reversal came in the first presented fair value gap. So it's such a simple concept. There are only two objectives the price has. It is only going to fill the gaps or take liquidity. Okay. So if it's bearish, it's not going to touch the liquidity, but it's going to react at the first presented gap after an order block is placed. Okay. So I cannot simplify this further. And you saw this the powerful move the market makes at these first presented gaps at the right times, right? So the missing piece in ICT's teaching is always going to be time, and that's what we found out. And you don't need any other gimmick that that you want to incorporate into your trading. Okay, it's a simple logic that a big move is only going to come at these times. Sorry, I keep repeating myself, but I still see not many people using this, right? So it's my duty to keep drilling this in your head so that maybe better sense will prevail and you guys will start using this setup. Okay, not worry about algo paths or some move that didn't work out as per the algo path and you keep questioning that or you keep thinking only about that. So there was this first presented gap. Now there was this gap as well, but price put our order block here at a high, which means this would be our gap to investigate. And here this would be our gap to investigate. Okay. And then if you miss this, then you just follow up with the other gaps. So we had a 35 here. It's perfect. We have a 23 gap here as well. So if you recall yesterday's uh, video, I told you that in this higher time frame gap, look for a CE time gap which has higher accuracy, give you 400 odd points. Then you have this gap where again 1329 stops. Again this gap you have 1729. 1752, 1753 is also 71. So you can see. So this is not like it works one time and I'm just making some video which doesn't work all the time, right? But it's not like that. 3 days we did. 3 days also the big moves came at those times only. So here you have again 1600 going and visiting the same FEG and falling. So what it does, what is the logic of this is price is choked at the first presented gaps, right? Here it can manipulate, but here it has to make a decision. Either it will break and go for the lows, or it has to give you a big move from here because it has consolidated enough, right? While it's coming down like this, it's just the smart money has accumulated long positions, and this is where they'll mitigate, and then this is where they will try to scare a lot of people into selling, and then they'll take it up, right? So it's such a simple concept to understand for any trader, for any maybe they have experience, maybe they don't, maybe they don't like algo paths, right? But still we are using the time from the algo path, so the reference is still the concept of time-based algo paths, but we are using the concept of first presented fair value gap. Okay, so right now we are coming into the first presented gap here. So we want to look at what is the time. So if this 529, 530 stops it, I'm going to sell. Okay, there is a 35 gap here as well, so that is a CE time gap where the first price reacted, and we are coming for the second time. Okay, so I don't know what more simplification I can make here. Some of you might think, okay, this can't be this simple, and some of you from the comments that I read, I feel like you're more drawn towards failure than success. Like you want this to fail, or you want to focus on only the setups that failed, right? So for that, I don't have any kind of solution. When the market gives you so much opportunities, you can easily ignore the ones that didn't work out. Okay? All right. So I'm not going to further discuss on the same setup because it has been discussed for 3 days straight now, and I have shown that it works without adding anything else in your trading. If this setup doesn't make you money, then I don't know, maybe you need to work on your own psychology a bit, okay, which I'm not good at, so I'm not going to further talk about it. Okay? All right, hope I wish everyone a good luck today. Let's do live commentary later. Thank you for all the support. Take care. Bye bye. So in today's video, again, let's briefly touch upon the higher time frame fair value gaps. And when you look at it, it's pretty simple. Like all these FEGs, the first presented gaps are mitigated before pushing the price higher. Right now, the order flow is bullish. Right? So we left only this FEG. So eventually there will be a down move to take all of this, and the reversal will come here. Okay. Apart from this, every FEG has been mitigated. So we had here, we had this, we had here, this one, and now this one. So we are pushing it higher. Okay. Here also we mitigated yesterday this FEG and this FEG, and then it fell to mitigate this FEG. And now we are pushing. So once the internal range is balanced, it's going for the external liquidity. So it's going for mostly for this high. Yeah. Because this is the FEG that it mitigated. And now we take this high and then fall. So don't try to short, uh, even though there might be small retracement with algo paths, but your big moves will come only here. So it's pretty easy to understand the bias. So you don't need anything else to know where the market is heading. Okay? If the market springs a surprise, say from here it continuously falls, it's okay. It's like we can't predict every move of the market. But overall, this is what the market does. So if you're looking from this side of the curve, it's just looking for these fair value gaps to mitigate. Right here you have. So basically, if you just sell in this sell side of the curve at the important times that I gave you, you would have probably caught this entire move. Okay. While this is moving, it's taking liquidity, right? So once it is balancing an internal range, Then it looks for, okay, what is left to take liquidity. So it's going for this. Once again, we come back. Next time it is going to target this. Right? So the same thing's happening here. So we balance this. We go for this high. We balance this. And we go for this high. Okay. Pretty easy. Now you can transfer this idea on the 1 minute as well. Say you know the first time the FEG is respected here. Now this was the first gap after this low, and we respected and we moved away. Right. So don't try to immediately buy here. Wait for the retracement. How deep the retracement will be to the first presented gap in this cycle. I mean in this leg. Right. So it's going to keep going higher. Here it mitigated. Here you can see again. So this was the gap, and price comes all the way here before it moves. Right. So if you align an algo path or if you align the start and end times here, then you would probably catch it the entire move. And once we come to the choke point, like I would like to call it, say for example here, let's not even go that far. So say let me do replay here. So while we are looking for this and we reach the first presented gap on the sell side, now this is where the market thinks what it needs to do. Right? And we have the right time here as well, 0 0, and then drops it. But this is where you need to understand a little bit about algo path. Right? So if the market is coming here at 3, then it's going to start a market maker buy model at 11. Right? So it started at 10 here and then it pushed higher. But when you look at the gap that we mitigated here, it was at 305, 306, which is still our very important number. Right? So this is when I know that this FEG, the first presented gap, is no longer going to hold because 6 or 7 made a low here and we balance these gaps. Price has to decide now, right? We reached a choke point here, we reached a choke point here, and now market has to decide what it wants to do. Okay. So I don't think then it'll go here and fall, right? Because now we have very important numbers. We have algo 1 starting here, so it's going to push higher. Next time when it comes here, that's when I'll be thinking, okay, what can market do here? Right. So I want to sell here. It's not a good number for me, like 51. So I'll wait to see what happens. Okay, still market reacts. Right. Now you can see it stops at 4 o'clock, which means it's an important number. And we came here to mitigate these gaps. Now it's ready to break it. So you get my point is like only the important times, such as here you can even interpret this as 35, right? So only these times will tell you where the market whether the market is likely to break the first presented gaps. Okay. So if here, so this one didn't work out because of the path also, but eventually when I look at it, it's 424 and market does addition here, which is 28. It meets a path of 51 to 29, which is the end of the algorithm. And probably you would lose here. So I'm not saying, okay, you would definitely know how to do trade this. So when I come here at 4 o'clock, okay, the market tells you that 410 is when the algo starts. And then 10 to 23 is a path. It takes higher. Okay. And this time we break the first presented gap. Okay. And when we look at here as well, like, okay, why didn't we go for all this liquidity? Right. So you see, there is something stopping the price. The 330 candle is telling you it's not going to go below that. Right? It's like a turtle soup. So eventually, how you can read this is, okay, we took the liquidity of 30, indicating end of the path. That led to this big move. So you basically see this everywhere. It is the same stuff. Right? So you have this FEG here. It's going to come here, balance it, take liquidity. So if you're only focused trading here, and I don't care anywhere else, all you have to do is match a path. Okay, 47. 47 should go to 11. Okay, I'll trade this. This again, 47, 55. It's not a path. This will also give you 34. So you can probably play a subtraction here. So if you take it from here, this is 22 to 35. Or else we could say this is like the reverse algo, 20, 35, 47 to 54. But everything is happening in the first presented gap. So all you have to ask is, okay, the price is stopping here. This is the first presented gap. Perfect. So next time when the price comes above this, I will sell. If the price chops around and if it is intending to break this, it will create some kind of a low that tells you end of the path is reached. Now here definitely 30 is when 30 low is put, I'll be thinking okay we break out. But here 34 high tells me the direction is lower. Okay. So here also every time this is the first presented gap and then price stops here once, sweeps, sweeps, sweeps. Right. Again we come here, sweep. The next time we don't sweep here, we create a failure swing. But I would be bullish if this was taken. This is a good example. Let's try and figure it out. So the first time the market stopped here and then it should have fallen, right? But this is where the market is giving you clues that we are reaching like 28, 30, right? End of the path. So and this is a path as well, like 23 to 29. Although there is no liquidity sweep here, but it's pretty common sense for us to think, okay, no, the market is not willing to go down. So if this is your first presented gap or this volume imbalance, so it's here, then price sweeps it. So next time when we come here, I want this to sweep this. If it creates a failure swing and then goes higher, it's probably going to dump. Okay. So right now we are in this gap, right? And see if it's making sense, like 2018 to 30. Yes, so buy, right? Because the market has to decide now what it can do. It can create a 35 high and dump. That's fine. But as of now, this is the choke point, and from here, market has to go higher. So same principles that we apply on 15-minute, 27-minute, you can apply here on the 1 minute. So here, this FEG was not mitigated, but these are the same times, 23, 24. So it uses this to push higher. Okay. So again, a choke point is reached here, and you can see a lot of chop happens, right? So market tries to sell off, but what makes it a high probability breakout, right? So it takes this 36 low. So this 36 low itself tells you market is ready to break out. It comes and sweeps this liquidity and it spends enough time in this gap and now we are ready to go higher. Now I'm not going to trade sell here or to look for algo path here. Let it come here. And this is where you would think, okay, a choke point is reached. What is happening? So again, 36 breaks it. So don't get frustrated with this chop. You're thinking endless manipulation and all that. It has a reason why the price behaves like this. Right? Most chops happen at the extremes. It won't chop around in the middle. Whenever it reaches a first presented gap like this, the market is thinking, okay, what do I need to do next? How do I trick people? Here it's going up, down, up, down. And it's tricking people, right? A lot of people will get in here, multiple resistance being created. But what is the final trigger to break it out? This 35 sweep. Same thing here. So here we have a price already took support in the first gap, right? So if it has to be broken, so the market has to create something that is likely to tell you it's going lower, like here 30. Right? Otherwise, every time you see it came here, it pushed higher. It came here, it pushed higher. But at 30, it said no, I'll probably go lower, and it did. Okay. So right now it's very interesting to see if this 35 creates a high, so we dump. So go where? We have this gap, we have these imbalances to fill, so you can come there. Okay. Because if 35 creates a high, it should go until 47, so it might dump. But the initial idea for me is to just buy, because this is the safest place to buy. Okay, so the idea is to make it easier for you. Now I can make it complicated by just explaining algo paths and tell you why you didn't buy here and all that. But most of us understand ICT language. Most of us can draw this FEG and look what is happening here. Or if you bought in here, you could hold till this FEG. Or you bought in here, you can hold till here. And that is still a good number of handles. So anytime you buy or sell, think are you in the first presented gap? Because if the first presented gap support needs to be broken, it has to be by a end path or a start path. Okay. All right. So that's all I have for this video today. If you have any questions, please direct at me and then I will answer. Take care. Bye bye.